Good morning. It's Monday, August 20th, and this is George Tkachuk with Know Your Options Inc. reporting you from the CME Group trading floor in Chicago. Okay, the market rally continues. Although the indices are off this morning, markets are trading a little bit lower. But generally speaking, the NASDAQ, it's trading above 3,000. We've been above that level for about a week and a half now, and it's showing strength, continuing on rallying. The S&P 500 also trading above the 1,400 level. Seems like it's finding support there, and of course the best thing is no one's believing this rally, and that's why it continues to go higher for now. Now, as everyone's talking about low August volumes, don't take what you hear at face value. Taking a closer look, you'll notice that 2 weeks ago, when the NASDAQ broke through 3,000, the volume picked up pretty considerably. Also last Thursday, when the volume powered higher off this trading area, the markets continued higher on increased volume. So for now, it looks like the trend is up. Now, as earnings season's winding down, it's a good thing to think about, so what do all these earnings mean? So let's take a kind of step back. What are really earnings? Earnings are basically the lifeblood of all companies. Profitable companies, the only way they can become profitable is through earnings. And if we study the traits of the best performing stocks over the last few years or decades, you're going to find out that it was certain earning traits that drove these stocks higher. So what are these traits? Well, some of the traits are, for instance, you want to be looking at growth stocks that have at least earnings over the last quarter of at least 20%. Most growth stocks will probably be in triple digits, 70%, 100%, 150%. Those are the things you want to be focused on. You want to focus on stocks where the earnings are accelerating, meaning over the last 3 quarters, let's say they grew one quarter 20%, next quarter was 50%, next quarter 70%. Again, those are the traits of your winners. You want to look at earnings, annual earnings that have grown at least 25%. And again, most of your better performing growth stocks will probably be closer to 75%. You also want to take a look at an average earning over the last 3 quarters. We find that most growth stocks have at least 30% average over the last 3 quarters, with some of the better stocks having average earnings of about 70%, 100%. Also, you want to see if analysts have been revising their earnings over the last few weeks or last few months. This also is the type of momentum that will power the growth stocks higher. And of course, you also want to take a look if there's a turnaround story in earnings, sort of something like we're seeing in the housing sector, where over the last quarter, a lot of the home builders reporting earnings and the growth about 200%, 150%, and so forth. So if you take all these criteria I just outlined and you run some screens, it's not surprising you run into some of the better quality stocks. I mean, you look at a company like Apple, whose 3-quarter average earnings growth has been 76%. If you look at some of the stocks that recently popped out into new highs, Mellonix, Michael Kors, 3D Systems, they also had extremely high earnings growth. Earnings growth has accelerated and pushed these stocks forward. Now, in the last prior weeks on this segment, we talked about relative strength, we talked about industry groups, we talked about fund sponsorship, and it's no coincidence that you throw in earnings growth and we keep coming up with the same names. Of course, these aren't recommendations. These are just for educational purposes only, to just kind of clue you in as the kind of things you should be looking at. As always, let price and volume be your guide. Take a look at the earnings. And this is George Tkachuk with Know Your Options Inc., reporting you from the CME Group trading floor. Thank you.